Hi guys, Chris here. I just want to talk to you about a charting pattern that we refer to as a head and shoulders pattern. It happens at the end of a significant run up and signifies potential trend reversal. So basically, as I say, it happens really at the end of an uptrend. So we're getting our highs, our higher lows, our higher highs, our higher lows, and then another higher high. And then all of a sudden there's an indication that the trend might not be up quite so strong when we get a low that's roughly in line with a previous low. Okay, this is what we call the neckline. At that point, what you can also look for is divergence. Okay, so let's just put a line here on this, what they call the left shoulder, and then this would be the head, just here. And guys, just think, for those of you that are not familiar with divergence, it happens when you get a higher high in the marketplace, and then you can put like a line between the shoulder and the head, and you'll see you have an upward slope. If you compare that to what we've got on the MACD down the bottom, you can see that the MACD is actually sloping downwards. Now that signifies divergence. It's an indication that the trend is slowing down. So it's really a good warning sign. So after we've spotted that divergence, then we can have a look down here and we can see the price didn't really make a significant higher low. It came all the way down, in fact, on this occasion, past the previous low. So we've got basically a left shoulder here, we've got our divergence, we've got now the fact that this next low has come almost in line with the previous low. So now what we would do is we would look out for the right shoulder. So we've got a potential set up for a head and shoulders here. My next thing to do on a head and shoulders, basically at this point we will probably be seeing this, just this part of the chart, and the rest of it is still to come. But we've now all of a sudden got a low and a zigzag up. As soon as that zigzag appears, then what I would like to do is I would like to put a Fibonacci from the head right down to the right hand neckline, and start looking at perhaps between the 50 to 61.8, seeing if there's any previous support and resistance, which we've got here. Also just going back in time quite far. And yeah, you can see that's a massive resistance level there as well. So then I'm happy that that area there would be my potential area of a reversal, and I like to call it my sell zone. I'm going to make that color red. Okay, so remember, at that point I haven't seen any of what's happening there. I've just got my zone. Okay, so firstly we've got the left shoulder formed, we've got the head that's formed, we've confirmed that it might be head and shoulders. What gives us a clue is this divergence. The trend is slowing down. Then we've got a low that's roughly equal to the previous low. So what I want to see is a retracement up, where I can then potentially trade down. So as price gets into my zone, I look for two other signals to trade. Can either be a great move into just ticking inside that Bollinger Band, or it could be candlestick information, or it could be a nice stochastic signal, or MACD. So basically there's four things to choose from: candlestick information, Bollinger Band, stochastic, and MACD. I'm only looking for two of those reasons to trade. On this occasion, the first thing I'm seeing is a lovely candlestick. That's a nice dark cloud cover. It's a big bullish candle followed by a big bearish candle that's finished almost at the end there. So we call that a dark cloud cover. The Bollinger Band, I can't quite see. I need to just zoom in. I'm not too happy with that Bollinger Band. The body is outside of the line there. The next thing that I would really be looking out for is a good stochastic signal. Pretty much at a simultaneous time as we got that dark cloud cover, we also got a stochastic signal there. So I would be happy to trade that based on the candlestick and also the stochastic just turning and popping down through the 80 level there. So I would enter the trade at the end of this candle here. Just get out of the way so you can see. So this yellow line here at the end of this bearish candle, then I would enter the trade. I would have put my stop loss just above that high there. And the nice thing about Head and Shoulders is that it is a measured move. So the anatomy is basically the left shoulder here, the head coming down to the right shoulder. What we do is we actually get a trend line and we take it across the neck, kind of like under the armpits, if you like. And then basically what we do is we take our crosshair, we measure from the top of the head down to the neckline. And it's about 159, let's call it 160 pips. And we know that a Head and Shoulders should move exactly the same distance again from the time that it breaks that line. Okay, so from the time that it breaks that line, I'm going to measure 160 pips down. Okay, it's about 160 pips, and then my take profit would be there. What's important to note is that you will also look for previous support and resistance. So, what's interesting is 160 pips down from there. You've got this big previous support and resistance. So I wouldn't really want to put my take profit past that. So I'm just going to put my take profit on that big support and resistance there. If we'd have done that, let's see what happens. So it goes up, up. Funnily enough, it actually went back to retest that level again. See? But it came down and it basically fulfilled what we were talking about. It hit exactly on our target there. Okay, so if we'd have been brave enough to stay in that trade, you can see here on the Forex velocity indicator, we'd have got a 4-to-1 risk-reward ratio. So if you'd have risked 1%, you would have made 4% from that trade. I'll just give you an example of a inverted Head and Shoulders as well. Same process. Okay, so here, what we've got is we've got a nice run down here. And then come to the end of that trend. And I'm looking now for potential reversal patterns. And I've got a nice Head and Shoulders pattern here. The first thing I've got is the left shoulder, which is about there. The next thing I've got is the head, which is there. So one of the first things I look out for is, do we have divergence? So if I put my vertical lines in and then I draw a trend line from the left-hand shoulder through to the head, and then I look down on my MACD and I do exactly the same with those lines. I can see we've now got confirmed divergence because we've got a sloping line down on the price action, and yet the MACD is sloping out. So it's another indication that we've got a slowing down of the trends and things are not perhaps going to continue that way. On this occasion, the zigzag gave us a little false signal, so I would more see the zigzag. It's only a couple of candles there, so you can consider your zigzag to go from there to there. So we've got our left shoulder, we've got the top of the head, we have got divergence. The next thing that we would look for is a low roughly equal to the previous low, which we have here. So as soon as we get that, and we have a little zigzag up, then I'm going to want to put my Fibonacci tool A to B and look for possible areas of that we can trade from. So yeah, we all know that the most highly probable areas are between the 50 and the 61.8. And we've got a couple of great support and resistance levels here. So at the point that I put the Fibonacci in, we would only actually see that much of price. Okay. As we start going down, we're starting to wait for the green box in here, sorry. We're starting to wait for the price to hit our zone, which is the price comes into the zone. Now we have to wait for two signals to actually trade it. Okay, so what do we have here? We've got a nice tick inside the Bollinger Band there. We've got a nice bullish engulf and also a fantastic stochastic signal. Okay, so I would have entered that trade at that point. Obviously, your stop loss just goes a little bit above your ABC points. Okay? And then we measure the move to find our target. So what we do is we find the neckline. This is the neckline here, and we draw a trend line. Across. And then to find our target, we draw from the top of the head. We get our crosshair tool here, which is basically this little cross here on your menu. And you take it from the top of the head or the bottom of the head on this occasion, because it's upside down, and you drag it to your neckline. Okay, that gives us a 370 pip target. So what do we know about Head and Shoulders? We know that it tends to go the same distance again as to from the top of the head through to the neckline from the break. So we've got 372 pips. We just take our target from there, 372, about there. What blue line got? Okay, there's the break. Okay, that's about 372 pips. And if we'd have gone with that, we would have got a point. We've got about a 2.6 to 1 risk reward ratio. So if you were risking 1%, then you'd have made 2.6% on that particular trade. I hope that makes sense, guys. I know it's quite a lot of information to take in, but if you guys do have any questions, then pop on the chat room, drop me an email, give me a call. Thanks.